आज की ताज़ा खबर। बेंगलुरु में रहने वाले लू और अमेरिका में रहने वाले सिड आपसे कुछ बात करना चाहते हैं। संगीतकार राजेश के साथ आपका स्वागत है लूसिड में।
What's going on, people? Welcome to another episode of Lucid. And here's Sid. And I want to start off this podcast by saying that networking events work because one of the main guests for today's podcast, I met her during a networking event. It was in my previous semester where I randomly went into a networking event and I met this wonderful human talking passionately about VC and the whole VC space itself. And at that moment, I knew that I had to bring her onto the podcast. Today's guest for this episode is Jennie Graham, who is a MBA student at Duke's Fuqua School of Business and has previously worked in supporting sustainable businesses in sustainable businesses and supporting founders in Afghanistan, Myanmar, and Middle East. So, hi Jenny, welcome to the podcast. How are you
Hi, it's
today?
great to be here. Thank you so much for having me.
Yes. So let's get started. I think Jenny, I want to start off with talking about your origin story. Uh, you started at this company called Turquoise Mountains. Let's talk about your experience. How was your experience there in supporting all these
Sure.
founders?
So let me begin by telling you a little bit about Turquoise Mountain in general. So Turquoise Mountain is an organization that supports artisan entrepreneurs in communities affected by conflict. So we worked across countries like, as you said, Afghanistan, Myanmar, and countries in the Middle East. I was fortunate enough to spend some time with our projects in Jordan, Afghanistan, and Myanmar, working across marketing and fundraising functions. Um, and the Turquoise Mountain model is really all about supporting kind of ambitious creatives in the creative sector to launch and run their own businesses and support their communities, hire more people. It's this model of sustainable development through entrepreneurship. And it was an amazing place to work. I got the opportunity to meet with founders from all over the world, from all different backgrounds, most of whom, or I should say, all of whom were ambitious, were incredibly resilient, and were very inspiring.
Uh, the one interesting question I had was when I was reading about Turquoise Mountains is, supporting founders in these places like Afghanistan, Myanmar, Middle East. What are the challenges like? Because I know, like, compared to supporting founders in developed countries versus these places, what were the kind of challenges you faced while supporting
Sure.
them?
So there were a number of challenges. I will touch on a
Mm-hmm.
few. The first was primarily was this point of navigating uncertainty, right? So in a lot of these countries, there are
Right.
quite tricky political, economic situations. Everything from the effects of the pandemic, which obviously impacted us all, to very localized political unrest, and um, these wider factors really impact the life of an entrepreneur and the life of someone who is trying to build a business in these places. So that was the main challenge, and trying to support them through that when the uncertainty was on all sides. So we didn't know what was going to happen. They didn't know what was going to happen. We had to sort of build in resilience and build in this kind of flexibility to the way in which they operated. So that was one main challenge. The other challenge was helping them to reach clients and helping their clients and customers to really feel a connection with our entrepreneurs, many of whom were thousands of miles away on a different side of the world. That was a unique challenge, and one that I was tasked with sort of overcoming. But it was incredibly rewarding to kind of create these connections and help customers find these businesses, help these businesses find their customers. That was the a fun challenge, certainly, to try and address.
Right. Uh, to follow up on that, like I had two questions, and my first question is, what was the culture of like entrepreneurship like in these places, right? Like, say, take the US or the UK, there's a lot of talk about entrepreneurship, there's like a lot of support, but what about these people who are trying to build local businesses? Like, what were their confidence levels like? Could you speak to things like
Sure.
that?
So on the confidence level front, absolutely the same, and that's one of the most incredible things
Okay.
in working in
Right.
those parts of the world. So
Mm-hmm.
I would say, first of all, that founders anywhere are incredibly resilient, incredibly ambitious, by nature, very optimistic people. They want to make the world better through their ideas and their inventions, and they're very hardworking. I would say that's a universal trait, or those are universal traits
Right.
across all countries. And there's an element of craziness in there too. Founders have to be crazy, so that's definitely part of
Yes.
it too. So
Yep.
that there's no difference there. I think the difference is really around those kind of localized challenges. So um, depending on a founder's background or which country they were operating in, I think those types of challenges just make the entrepreneurial journey quite distinct in each of those places.
Right.
There isn't as
True.
much for I'll give an example. There isn't as much kind of ecosystem support, right? So there are not
Mm-hmm.
accelerators on every corner. There are not VCs or ways to meet VCs. Often um, they have to fight harder to reach their customers in some ways. So
Right.
those are the kinds of sort of unique challenges that the entrepreneurs we worked with had to face.
Right. Yeah. And the second question I had was, you said that the fun challenge was about connecting the founders to say VCs, customers, and like the creating the whole ecosystem for them. And like talking about like people from other countries, say the US or the UK, how do they feel about these founders, right? Because these are people where the startup ecosystem hasn't been built that much. So, what about the confidence of those people supporting these founders?
I would say the response was pretty incredible. So our founders in
Mm-hmm.
particular weren't seeking at the stage that we were helping them, weren't seeking kind of VC funding or institutional funding. It's not so much appropriate for the
Right.
creative fields. But just in terms of the
Mm-hmm.
wider entrepreneurial ecosystem in those countries, I would say I I would say people were pretty excited to connect with people doing cool things
Wow.
in difficult places. I think it's a
Right.
real testament to their character, and I think people recognize that.
Mm-hmm.
Um, so once they knew of them, it was really easy to create those or to facilitate those connections. Whether that be buying a piece of their work or supporting them through some of our sort of grant funding or entrepreneurial grant funding.
Right.
And it was really just a matter of putting them in front of those people. Not physically, unfortunately, it's quite tricky, but
Mm.
digitally and
Right.
in other ways, getting them in front of
Right.
new audiences.
Right. Yeah, I think that makes a lot of sense. I generally keep thinking about this. It's just putting yourself out there and trying to make sure that more people get to meet you, and you never know where opportunity strikes, right? Uh, I know you've worked a good number of years at this company supporting these founders. What are your like your best experiences and memories
Oh my
from here?
goodness, that's a great question. My I think my best experience was probably a trip I took to Yangon, where we were supporting
Mm-hmm.
entrepreneurs in the weaving textiles sector. So Yangon is this wonderful old capital of Myanmar, for those who don't know, and it is both a beautiful city and it is filled with beautiful people who are so kind. And I would count many of the people that we worked with among that number. I I really enjoyed getting to connect with some of the supported businesses out there. I enjoyed seeing them at work, which was wonderful.
Mm-hmm.
And it just, like I've described, facilitating those connections was so important in my work, but it was also really important for me to kind of connect with the entrepreneurs that
Right.
we
Yeah.
worked with. I felt a lot closer to those who I worked closely with in Jordan, for example. But I didn't have a lot of opportunity prior to that visit to connect with our supported businesses in Myanmar. So I think that was one of the most sort of transformative experiences of my time.
That's amazing to hear. So you've worked a good number of years at Turquoise Mountains, and then you decide to start the Duke MBA journey. Could you tell us about that? Why did you decide to come to Duke?
Sure. So I spent about 3.5 years working at Turquoise Mountain, and really loved it. But I began to develop an interest in impact investing via the VC model in particular. We were this kind of
Mm-hmm.
we were this sort of entrepreneurial support system that was loosely connected to, but outside of the VC world. And I began to see that actually some of the most amazing world changing ideas were coming out of VC funded businesses. And one thing
Right.
you need to know about me is I'm incredibly driven by impact, right? I really want to
Mm-hmm.
work with people who want to change the world. I want to work with people who are really passionate about helping people. And I began to see that actually the VC model or the VC space was a great place to find those people, was a great place to do that sort of work. Um, and I realized that I could and should do I realized I did have this talent for working closely with businesses, identifying problems, solving them. And I had this ability to be curious about lots of different things. And I think all of those are skills that feed quite well into being a VC. And so with this sort of hypothesis, I decided to apply to business school to kind of see, is this actually true? Could I actually do this? And I'm pleased to say that I most of them have been proven true so far. I feel as though it was a good theory, and I am discovering the truth about a lot of different skill sets that I have that are appropriate for VC, which is great.
That's great to hear. I am super excited to move into the world of VC, but before that, I just want to know how is your. I know you've finished your first year of MBA. How's your year one MBA experience been so
It
far?
has been incredible. I cannot
Uh-huh.
overstate the importance of an MBA for me. It's not for everyone, I will say that, but for me in
Mm-hmm.
particular, it has been totally transformative. I think there are probably two big important things that have come out of my first year. And the first is this network building piece. I've managed to develop connections with future founders, future investors across lots of different sectors, lots of innovative, very
Mm-hmm.
ambitious people who are in my class and outside of my class. I think that has been an incredible experience, and one I don't know if I would have had otherwise. And
Right.
the second is really building that skill set. I found building my skills in kind of finance and business and strategy more broadly has, I think, only helped me to be better at what I hope will be my future job in or full time job in VC.
Right, got it. So I think you brought up an important piece of networking, and I'd like us to dig deep into it. So can you tell us, like, there's this huge talk about networking, say you need to keep networking, say for your job, future opportunities, and etc. How has networking helped you, and what according to you is networking? Because there have been like a lot of definitions. Some say you need to network at a higher level, and some say you need to network at a deeper level. So yeah, I'd like you to talk about it.
Sure. So I guess the first thing I'll say is that a lot of people get quite scared of networking because it feels like this big formal scary
Mm-hmm.
thing. And it can be. It definitely can be. But I think when you really break it down, I would define networking as just a way a way to kind of a way to create connection and a way to build your knowledge in a space, which doesn't sound so scary
Right.
necessarily. It's a great way to make friends with people in your space who, if you're in the VC world, can send you future deals, to whom you can send future deals, who can refer founders to you or who could be founders. I think those are both great things. But beyond
Mm-hmm.
that, it's just a way to meet with people who are passionate about what you're passionate about and to share interests. And that can be super fun. And
Right.
it doesn't have to be as formal as discussing industry trends or you know, things that are specific to work. It can just be about finding someone who has the same hobby as you, and you
Right.
can connect on that level. So I think it can mean lots of different things to different people, but I think it's really important to think of it as less, you know, scary and formal in your mind, and just approach it as something that is fun and maybe useful, but mostly fun.
Hmm. Right, yeah. I remember, I feel like until last year when I joined Duke, I had never networked before. And then once I came into Duke, everyone's like, you have to network with people, otherwise you're not going to get an internship. And I did start networking, and one thing I realized is that you're not going to have the same kind of connections with everyone. You're going to vibe with some people, you might not vibe with some people, and that's okay. It's not that the way you're networking is bad. So it's because at the end of it, it's a human connection, and it depends from person to person. I wanted to know from you, like, do you have like some method to network, or do you network regularly? What's your
Oh
secret?
my goodness. So I think I think my secret is to just stay curious. So what I mean by
Hmm.
that is the least stressful way to network and the easiest way to network is simply to just keep asking questions. Um, I
Right.
had a professor at business school who has told me, and I've found this to be true, that people love to talk about themselves, and people like to
Hmm.
talk about things about which they are an expert, and who is more expert about, you know, you than you. So
Right.
I think it's really it's a good way in, and it's a good sort of hot tip to just keep asking questions about people. Stay curious.
Hmm.
You know, if you're feeling nervous about talking about yourself, just ask the other person about themselves, what they do, what they like, what they're interested in, what they see as an interesting trend in a space. I think that can be a way to keep the conversation going. It can be a way to
Hmm.
build a connection if you're someone who's not super familiar with networking, and it's a great way to learn as well.
Right. That's true. That's true. I feel like, it's just those like first few conversations, say like you do it with five people, then you're okay with it. You're like, okay, cool. I know what is gonna come. So yeah, I think it's just that start that you have to do.
Absolutely.
So this is the most interesting part I want to talk about. It's the venture capital space. This is the space you are aspiring to get into. So, what is venture capital? To break it down for people who don't know anything about
Okay,
it.
great question. So venture capital is an asset class. It is a subsector of private equity. So it is a means by which people deploy money into early stage or late stage startups, um, in return for equity, in return for a share in that business. At its very basic level, that is what it is. Um, it is, you may have heard the stats that, you know, 1 in 50 startups succeed. So that will tell you it is a very risky asset class. But it is also very high, you know, along with that comes the high return. So venture capital is a means for which to create outsized returns through investments in startups.
Right, yeah. And I think over the past 2 years, I think most of the people have heard about VC funds because so many startups getting VC funding, so many companies getting a lot of funds, and they've heard about all these big funds like A16Z, Sequoia Capital, and they have these huge funds, right? So how do these people get funds of such big money? It's like $100 billion, $10 billion. So how do they get these funds?
That is a very good question as well. So every VC firm is different in how they raise their
Hmm.
funds. But the
Right.
primary means of sort of accumulating that, you know, big pot of money in which with which to invest is through an LP. So an LP is a limited
Hmm.
partner, um, and they are typically large asset managers. So pension funds, endowments, family offices, big corporations, anyone who manages a large sum of money, and as part
Right.
of their wider portfolio, they will allocate a certain amount to private equities, and within that to venture capital. So a typical VC fund will consist of, general partners, and it will go all the way down: partners, principals, associates, analysts, depending on how big
Okay.
your fund is. But the general partners will go out and they will raise funds from limited partners, who will invest in funds. Um, and that's
Uh,
the main model. I will say,
mm-hmm.
however, that the VC fund for which I work part time is Towerview Ventures, part of Alumni
Right.
Ventures, which has a slightly different model. It's a network powered venture capital model. And what that means
Okay.
is Alumni Ventures raises its funds from individual institutional investors. So that is
Oh,
people
okay.
with, I believe the criteria is a salary of $200,000 or more for the last 2 years. You qualify as an institutional investor if you are at that threshold, um, and you can invest into the Alumni Ventures portfolio of venture capital. I think the minimum check size is between 10 and 25K, and you can get exposure to the venture capital, to the asset class. I know there are a number of other funds who operate in this way, but it's still
Mm-hmm.
not the mainstream way. The main way that people get involved in venture capital is as an LP, as a pension fund.
Oh, okay. That's really interesting. And what are these people promised for, putting this money into VC?
Again, it varies massively by fund, but I
Mm-hmm.
think the the main sort of promise, or the main idea is to 3x their investment. So they're looking for a
Mm.
3x return over the course of 10 years, which is the typical life
Okay.
cycle of a VC fund.
Okay. And so it's like, say I'm a LP and I invest X amount of money into this VC fund. So do I have to wait for 10 years for getting my money back, or is it like regular intervals of time? How does that
So
work?
it,
Is there a set standard?
it really depends on the fund structure.
Mm-hmm.
Most of the time, your money is locked away for the 10 years. So it's a very
Okay.
illiquid asset class, which is why there are such high thresholds for
Mm-hmm.
getting involved in VC, and
Right.
why it tends to be mostly institutional asset managers who invest in venture capital. Um, there are
Okay.
funds who do return funds to LPs within that
Right.
10-year time frame, but the majority
Mm-hmm.
tend to return it after that period.
Okay. And do these VCs operate in certain themes, like in their investing patterns? Is it like only tech, only social causes, or is it like this VC can go into a wide array of fields also?
Sure. So again, with this one, it does depend. There are a large number
Right.
of generalist funds out there who are sector
Mm-hmm.
agnostic. They'll invest across anything from fintech to health tech to climate.
Mm-hmm.
Um, and there are stage agnostic funds as well. So they can invest from pre-seed, seed through to A, B, C, anything later than that.
Ah,
Um, it
right.
really depends what kind of fund, what kind of fund you're looking for, or what kind
They're
of fund you
operating.
are. But
Right.
I'll say, Towerview Ventures, which is the fund for which I
Mm-hmm.
work, we are all of that. All of that. We are sector agnostic. We are stage agnostic.
Mm-hmm.
We allocate certain amounts of our portfolio to sort of to the seed stage, the pre-seed stage, and then all the way through. And we try to maintain a diversity of sectors within the portfolio, um, as a means of kind of hedging against the risk that might come with being fully invested in fintech.
Right. Yeah, that makes sense. Yeah. I want to talk to you about your experience at Towerview Ventures. So I know that you mentioned you invest in companies from various sectors. So what is the process of vetting these companies, doing the background checks? Like, how do you know, okay, this company has a higher probability of succeeding, so I will invest in it?
Sure. So everyone has a different method. It can
Mm-hmm.
vary massively. My apologies. I'll start that again. So
Mm-hmm.
everyone has a different method, with when it comes to vetting companies. But the way I think about it is sort of two different sections. So I will think about the company and I'll think about the deal. On the company
Okay.
side, so the sort of things that I will look at are things like team. Do they have a background in this space? Do they have expertise in this space? Do they have the resilience and character to succeed? The second
Right.
aspect is business model. So do they have a viable business model? Do the unit economics work? Is it highly scalable? Do they
Mm-hmm.
have sustainable competitive advantage? Are they defensible in the space? Can others come along and do what they're doing instead or do it better? That's really
Right.
important, that one. Uh, I'll also look at the addressable market. So, is there a large market
Mm-hmm.
opportunity here for the product that they're building? And will people want it? Will people pay for it? And then
Right.
the final thing on the company side is growth and traction. So this will vary depending on what stage of business we're looking at, but typically
Mm-hmm.
we'll want to see something along the lines of customer adoption, or they need to have proven themselves in the market somehow. And that can
Right.
be from paying customers, or it can be from building a beta and getting it out there and showing that people want it. But that is important.
Right.
On the deal side, I'd look for strong co-investors. So who else is investing in this round? Um, do they have the right expertise to help this startup overcome some of the future challenges that it might face? Is it an attractive valuation? And are the terms of the deal good? And do they line up with where the market is today, which is crucial? And then finally, does the fundraise provide the startup with a decent runway? So are they going to be coming back to me in 2 months asking for more money, or is this is
Mm.
this venture round going to last them 12, 18, 24 months? And that can be really significant.
Right. Right. Yeah. My next question is from my experience of watching Shark Tank. That's where a lot of people come in and they say like, 100K for 10%, and then some people say 1 million for 10% of their company. So say when a startup founder comes and he pitches a new concept, which a new product which is not there in the market, and you don't have any competition to compare it with, uh, like what is the process in that at that time? How do you decide what is the deal going to be and how are you going to structure it?
Sure. So as Towerview Ventures, we tend to offer follow-on. Uh, we tend to follow into rounds.
Mm-hmm.
So we don't actually lead, and what that means is we will
Okay.
accept the terms of the lead investor in that venture round.
Ah.
And so they
Okay.
will often set the valuation.
Okay.
They will set a number of other terms, liquidation preferences and other
Right.
things. So we tend to accept the terms of the lead investor as a general rule, and that's why the co-investor piece is so strong. And we set such store
Mm.
by who else is in this round,
Right.
and do they have a strong track record in the space.
Got it. Got it. Yeah. And the next question I want to ask you is there are a lot of people who are trying to build companies. There's more number of people coming into the startup space, and most of the times they start out building the product first. Obviously, they do not think about venture funding or any funding at all. But say they're at the stage where they have to raise capital. What are the things a startup founder needs to think about while approaching VCs, and what does he or she need to think about, on building their portfolio when they're going for this VC funding?
Sure. So I'll say first of all that your comment about being product focused is absolutely right. I think it is so
Mm-hmm.
important for a founder to just get their head down and build. And that is the most important thing. Um,
Mm-hmm.
it is important to court investors and to find the right people to work with, people who will support you to do what you need to do. Um,
Right.
but maintaining that product focus is just the absolute most important thing.
Mm-hmm.
When it comes to talking to investors and making sure those conversations go well, I guess the number one piece of advice I would give to a founder is just prove your product in the market first. So
Right.
just build it and then
Mm-hmm.
test and iterate. So test some
Mm-hmm.
more,
Mm-hmm.
make tweaks, send it out, see what people say, and just get that customer feedback and make sure that what you're building is something that customers want. Does it work
Right.
for them? Are they going to pay for it? How much are they going to pay for it? That is just the
Mm.
most important thing. And I think while there are lots of things I could say about how to talk to investors and what the tenor of that, of your pitch should be and that conversation should be, I think just evidence trumps all. And I think if you have something that is proven in the market, whether it's just a beta test or something customers have paid for, I think that speaks volumes. It is maybe the most valuable thing you can do when it comes to speaking to investors.
Right, yeah. And so I know there are like a lot of people who are in the working sector who are corporate employees, and as you said, some of them fall into the 200K salary per year. Say if they want to get into funding these VC funds, how should they generally go about it?
Well, I think if you are an alumni of major universities in the US, Alumni Ventures
Mm-hmm.
is a great way to get involved in VC as an
Mm-hmm.
individual investor. It
Right.
allows you to invest smaller checks into interesting pre-vetted portfolio companies that the team has deemed to be high growth and high potential.
Mm-hmm.
That is a wonderful way to do it. Another way to get involved is to be an angel investor, is to deploy small checks into startups at
Right.
very early stages, to help them to build that MVP that I just talked about. I think that's a
Right.
wonderful way to get involved in venture as an individual, as a first step. And then we can talk later down the line about how to be involved in larger deals. But I think
Mm-hmm.
wetting your dipping your toes into the angel pool is a great place to start.
Right. And say like to a person who has no connections or no contacts about this whole angel pool. I know like generally I see on LinkedIn like there are a lot of people saying, I started angel investing, and I always think to myself, how did these people find these companies? So what is your suggestion there as to how can people find companies before actually thinking about investing into them?
Well, I think I'll say first of all, I'm not an angel investor, so I
Right.
have not
Yep.
experienced the trials and tribulations of sourcing as an angel.
Mm-hmm.
But my first suggestion would be to just get involved in your local entrepreneurial community. If
Right.
you live in a city, you'll be fortunate to be close to lots of accelerators,
Mm-hmm.
lots of events, lots of pitch
Correct.
events. Go along, try and meet founders, build your network, be really intentional about putting yourself out there. Um, and communicating the value that you can bring. I think as an angel, it is so important to be able to be that support system to a founder, perhaps even more so than at the later stage, because you are one of the
Right.
earliest checks into a
Correct.
business.
Yeah.
So being able to add value is just so important. So build your network is the key thing. Get connected in small ways to entrepreneurs in your local area, and find a way to demonstrate value, whether that's helping a business find talent, or helping them to vet contractors for whatever they may need.
Mm-hmm.
Suggesting a marketing firm or an accounting firm, or anything as
Right.
small as that can really add value in the early stages. So find a way to add value. You could also bring your own expertise to the table. If you have a background in consulting, it's a great way to support founders. So yeah, find where you add value, or identify what your value add could be, and network.
Wow. I feel like at the end of it, everything comes down to networking. It's like that's how you find all your opportunities.
It really does. It really does.
Yeah. But yeah, the VC space sounds so much fun. Can you tell me how a day-to-day life looks like for a VC fellow in your experience?
Sure. So with Towerview Ventures as a VC fellow, I get to work across a lot of different things. So
Mm-hmm.
as you can imagine, I get to I get the opportunity to meet founders and to do those early screening calls. So we might get a lot of inbound deal flow, people being referred to the team, or reaching out to the team directly. And as a VC fellow, I will meet with founders virtually and do an initial screen of their business. Now we have a fairly rigorous scoring system that we apply to
Mm-hmm.
all of the businesses that we vet, And it
Okay.
sort of provides some structure when it comes to the analysis that I talked about earlier, and allows us to have a sort of kind of unified system, that every business, regardless of their industry, is scored against this rubric.
Right.
So that's one part of the role. Another part of the role will be writing deal memos. So when startups get through to the stage where we're thinking about investing, I will help to draft the deal memo, and that might be doing some market mapping or competitive analysis, and just ensuring that these guys are really defensible against competitors in the market. Or, to the first point, the market mapping exercise will be to demonstrate within the deal memo the size of the market that this company is addressing, and what the size of the opportunity and potential upside could be. So deal memos is another significant part. And then the third and final part is developing investment theses. So a lot of what we do is doing research into a space and making sure that we understand where the opportunities are in that space for disruption and for investment. So looking into a space such as femtech, which is one I looked into recently, is something. It provides value to the fund in a way that is hard to quantify, because it's not directly deal related, but it is so valuable because it helps the partners to think seriously about a space and understand,
Right.
particularly as a generalist fund, it helps them to go deep on a space and be able to vet companies working in that sector in a more intelligent way.
Wow. It looks like you have your hands full, like from the morning till the evening.
Sort of feels like it.
Yeah.
But
And
happy to be busy.
yes, I could see the smile when I asked you like how your day to day looks like, and that's when you know that a person is really passionate about what they're doing. So yeah. Uh, yeah, I know like it's 2022 right now, and there's a lot of talk about market downturns and a lot of VCs stopping their funding because they're not sure as to how the market is going to proceed. So during these times, what do VC funds generally do? Like, what kind of role do they take on during these times?
Well, first of all, I'd say that I am a naturally very optimistic person,
Hmm.
so that should inform you about the tone of my response, and maybe take it with a pinch of salt.
Right,
But I mean, that said, in the current market situation, valuations are down, startups are being held to higher quality standards. We're looking at businesses and saying, can they navigate through this period effectively? Can they come out stronger? So there is a more kind of stringent process when it comes to assessing a deal on
right,
our side. Um, so that is one thing that founders perhaps have to contend with in a period such as this. On the fundraising side, it's hard to say how that has impacted us for the moment. People are still going to invest in venture capital even in times of economic downturn, simply
right,
because there are a lot of startups that come out of difficult times. I mean, post the
right,
2008 financial crisis was a great time for certain sectors of the startup world, and I think people know that, people see that, and they will continue to want to be part of that upside, um, more generally. But yeah, overall, I would say that economic downturns sort of force VCs to kind of to double down on their convictions.
right. Hmm.
So if you really believe that there is potential in a space, there is likely potential in the space in the long term. I mean, VC is a long game, as we talked about. The life cycle
Right.
of a fund is 10 years.
Yeah,
So
true.
as long as you are investing, as long as you continue and have always been investing in areas that have good long-term growth prospects,
Hmm.
um, I think you can weather storms like this.
Yeah, that's true. We've weathered a lot of recession cycles, so this is also gonna be a walk in the cake. So let's see.
Well, fingers crossed.
Yes. One other thing you mentioned was that as a VC fellow, you do a lot of research in a particular space to understand it better. Apart from money, what do startups get from VCs?
Oh, that is such a great question. Startups, I hope, get a lot from VCs
Yeah.
beyond the capital. So I think the primary way a VC adds value to the startups in their portfolio is through their network. So we're coming back to networking as ever. But in the context of supporting a portfolio company, network can mean any number of things. So it can mean helping them with hiring. It can mean helping them to acquire customers, helping to connect them to big corporates who might be customers if it's a B2B business, um, supporting them with with expertise in the space. So if you were a sector focused VC, if you're someone who's got a strong background in consumer, in D2C businesses, and you're supporting a portfolio company, then you might have insight into some of the problems and solutions that are relevant to that space. So that can be really valuable to a founder. And I guess the final part of the networking piece is really that VCs are well connected, or they should be if they're good VCs. So when it comes to raising your next round, a great VC will refer you to potential future investors and will help you build, as a founder, help you build your network of VCs.
Right, yeah. And one specific thing you mentioned was sector-based VCs, where they would have a lot of good connections. And one sector that I'm really focused on right now is the Web3 crypto space, which is changing so rapidly. So as VCs, how do you track these changes? Because it's on a daily basis, you keep getting new news and there's a lot of noise. So how do you work on this?
It can be really hard to stay up to date on a space. I'll tell you that. But it can also be really enjoyable. And if you're really passionate about the space you're working in, it doesn't feel like a slog. The way to do it is just to be a relentless consumer of information. So subscribe to all of the newsletters that are relevant to your space.
Right.
Set up Google alerts for topics you care about. Find people who are also really interested in your space and have regular coffee chats with them. Just sit and chat about the latest trends in Web3 with a friend who likes the space as well. I think all of those are really great ways to stay on top of the latest developments in your space. And I think it can be hard if you are working across a lot of different sectors. But it is really important to know what's going on and to know what works and what doesn't work in the space if you're a VC.
Right, yeah. So I think the next one is a personal question. You've already mentioned that your hypothesis of of becoming a VC, you're on track to do that. So how does one break into VC? I know there are multiple paths, you would have explored them, so I'd like you to talk about that.
Sure. I think the way to break into VC is kind of a blend of a lot of the things I've already mentioned, actually. So I'm afraid I'm going to say the networking thing again. It's just so important to build your network and to connect with people in the space as much as you possibly can. The second thing is really to just find your passion area and go deep. So as I said before, you make use of all those resources, find people who are passionate about the same thing as you, and just do your best to become an expert on the space. I think something that is really attractive in VC interviews is someone who has a real passion area. Maybe it's niche or maybe it's general, but I think just something that you feel you can speak credibly about and you are up to date on. I think that is one of the most important things and will set you apart in VC interviews.
Right.
And I'll say finally, just on the networking piece, I know that, a lot of people maybe don't have those ready built networks, right? So at Duke, there's a lot of ways in which to get involved in startups and the ecosystem, whether locally or nationally. And there is a network of people to connect to who will take your call. And that's great. But if you don't have that ready built network, which a lot of people don't have, I would say, perhaps this is not the opinion of all VCs, but I would say just reach out to people. I think you'd be surprised how many people will actually answer a cold email
Right.
or a cold out, an outreach on LinkedIn. it's not a huge percent. You may get ignored by 80% of the feelers you put out, but I think it is a surprisingly effective way. I think because VCs are so dependent on their network for good deal flow and to stay up to date on a space, then they're naturally predisposed to want to foster new connections
Right.
from anywhere. So I think I would say to people to just just reach out, see if people come back to you. And now that we're in a post-pandemic world or mid-post-pandemic world, go to events, go to free events, meet people in person. Everyone's dying to do that these days, so take advantage of that.
So you at the beginning of the podcast, you spoke about impact investing. You strive towards impact investing, and from your LinkedIn, you've mentioned that you like to support female founders, climate tech, and digital and financial inclusion. So, what made you decide like you want to focus on these three, and you want to go hard on them?
That is a great question. So I think my background should really tell you a lot about what my motivations are more generally.
Right.
Because I used to work for a social enterprise. Impact has always been important to me. It's always mattered
Mm-hmm.
to me that my work has meaning and that I feel like I'm adding value to the world when I wake up every day. And there are a lot of different ways to do that, but one of the ways that I've fallen in love with is this VC space. So
Correct.
I think for me in general, I'm always impressed by companies and by founders who are, they are trying to change the world.
Mm-hmm.
And I think areas like, people who are, diverse founding teams, people who are working in sectors like climate tech or digital and financial inclusion, these are all people, and these are areas where I think the opportunity for impact is just vast. And these are also areas where VC investment has a role to play. There's not always a space for VC to make a difference in every single sector, but I think in those areas,
Right.
VC can have an outsized impact. So
Mm-hmm.
that opportunity has always been, that opportunity in general has always been exciting to me, and is in particular in the VC context is super exciting to me.
Right, yeah. That's like really interesting. Like I'm super excited to see your journey from here to, getting there and supporting all these founders. And yeah, Jenny, this has been a great conversation. And I wanted to, I wanted to know to see if you had any last words about advice for any people who are looking into VC or any general advice.
Absolutely. So I think if you're looking to get into VC, just number one piece of advice is develop a very thick skin. And I think the same is true for
Right.
founders looking to
Yeah.
raise VC funding, is learn to take a rejection, learn to take a no
Mm-hmm.
really well. And that's hard. It's a really hard thing to learn.
Yeah.
But also remember that for every no that someone gives you, that's an opportunity you don't want anyway. You do not want the opportunity from someone who doesn't want to help you or doesn't want to connect. And
Correct.
it makes you take those yeses so much better. It makes you really value those yeses. So I think develop that thick skin, and just I would say stay optimistic.
Yes, definitely. I think what I've learned, three things from you is develop a thick skin, stay optimistic, and stay curious.
Absolutely. Three very important
Yes.
lessons.
So yeah, thank you so much, Jenny. Thank you all for tuning in, for the ones who listen to this podcast.